Hi everyone, how are you doing today? We are starting our first Forex trading class today and I hope you have been waiting for it. Today we'll be looking at introduction to Forex. But before then, please, if you have not subscribed to this YouTube channel, please click subscribe button. We'll be looking at what Forex is all about, who trade Forex, what are things with trading Forex, and what are the terms we use in Forex. With that being said, start with the introduction to Forex trading. What is Forex? Forex as a word is derived from two different words. We have FOR and we have EX. FOR stands for foreign and EX stands for exchange. So whenever you hear the word Forex, it stands for foreign exchange. It's an exchange of one country currency to another. When we talk about Forex trading, it simply means trading of one currency for another. I will give an example. If you are traveling from your country to another country, let me use Philippines for example. If you are traveling from Philippines to United States, you need to exchange your local currency to the United States currency. And local currency in Philippines is called Philippine peso. United States currency is called United States dollars. You first of all go to the money changer or your bank and request to buy United States dollars. Then you pay with your local currency, which is Philippine peso. That exchange that takes place inside that money changer's office or inside a bank is what we call Forex trading. You have traded your local currency to a foreign currency. That is exactly what we call Forex trading. Then the global market that allows this type of trading is called Forex market. There are many other markets, but it's only Forex market that allows the trade between one currency to another currency. That's why we call it Forex market. Why do we trade Forex? Why do we choose to trade Forex? There are other markets like stock market, we have indices market, we have commodity market, but Forex is the largest market in the world with about $6 trillion trade volume per day. That's true. That's true. The amount of trade in Forex market per day, per every single day, is about plus or minus $6 trillion. There is no other market nearer to that. That is why many people prefer to trade Forex because of its high liquidity and volatility. Okay, we have been able to establish that Forex market is the largest market in the world today because of its large volume of transactions per day. But then the question is this: who are the traders in this Forex market? I wrote all this down for you to understand what is happening in the Forex market. Who are the players in the Forex market? You need to know all this. These are the basics you need to know for you to understand what Forex trading is all about and what you are going to get involved in the nearest future as a trader. The first set of people or first set of traders in this market are the super banks. These banks determine the exchange rate of currencies. They are called super banks because of the large volume of transactions they trade in every single day. And this large volume of transactions they trade give them an edge in determining the exchange rate of currencies at any given time. Another set of traders in this Forex market are the corporations. These are big companies that participate in the exchange market for the purpose of business. These companies deal with banks, commercial banks, for their transactions. I will elaborate more on this. As we know, most companies depend on other companies in another country for their raw materials. So when these companies want to purchase their raw materials from another company in another country, they first approach the bank to exchange their local currency to the currency of the country where the company they buy the raw materials. So that is how they participate in this forex market. Another set of people or set of traders in this forex market are the central banks. They usually intervene in forex market. Central banks intervene in forex market to stabilize the currency of their own country. So that's how they participate in these forex markets. Then the last set of traders are the retail traders. These retail traders are like me and you. If you start trading forex, you join the group of retail traders. We are also called speculators because what we do is to speculate in the forex market to earn a profit. Very soon you'll be part of the retail traders where you sit down on your laptop or use your cell phone to watch the market and earn your profit. Okay, let's continue. Another question one may ask is, what is traded in forex? And the simple answer is currency. We trade currency in forex. When you become a forex trader, you'll be getting these questions. People will be asking you, what exactly do you trade in forex market? And the simple answer to that is currency. I explained that earlier, that forex trading is a trade of one currency for another. At this point, I would like us to download the trading platform. The most common platform we use in trading forex is MetaTrader 4 or MetaTrader 5. I prefer MetaTrader 4. Don't worry about the broker. The broker I use, which I would suggest or recommend to you, also uses MetaTrader 4. So first of all, download MetaTrader 4 if you're using iPhone, go to your app store and download MetaTrader 4. If you're using Android, go to your Play Store and download MetaTrader 4. If you're using laptops or desktops, download MetaTrader 4. Please download it now so that you'll be seeing what we'll be discussing in this lesson. If you have downloaded MetaTrader 4 on your phone, you should have something like this. And if you have downloaded MetaTrader 4 on your PC, you should have something like this. Don't worry about the charts. These charts you can see on the screen. Don't worry about that. In our subsequent lesson, you are going to understand how to read and interpret these charts. Don't worry and don't be scared and don't be discouraged about these charts. It's very simple to read. I just uploaded this picture for you to know whether you downloaded the correct MetaTrader 4 on your PC. If you have done that, then let's proceed. We have talked about currencies, trading of one currency for another currency. Now, what I believe you understood with it so far is that you have to sell one currency to buy another currency. In other words, these currencies are traded in pairs. But before that, let's look at the major currencies. The major currencies we have are these currencies listed on the screen now. These are the major currencies. Please, you need to pay attention to these major currencies. You should know them. On the left hand side here, we have the countries, their currencies, and the abbreviation of their currencies. Please, you should know these abbreviations, memorize them. Any place you see them in your trading platform, you should know which country's currency that represents. For United States, the currency they use is dollars, and the abbreviation is USD, that's United States dollars. Eurozone, that is the whole of Europe, they use euro, that's the major currency used in Europe, and the abbreviation is EUR. Then Japan, the Japanese currency is yen, and the abbreviation is JPY, that's Japanese yen. Great Britain is pounds, and the abbreviation is GBP. Switzerland is franc, and the abbreviation is CHF. Canada is dollar, and that's Canadian dollar. Australia is dollar, that's Australian dollar, AUD. Then New Zealand is dollar, and that's New Zealand dollar. Please, these major currencies, you should know them if you really want to trade Forex, because what you'll be seeing in your platform is the abbreviations of the currencies. Let's go back to the platform we downloaded. You can see that all these currencies are represented with abbreviations. So that's why you need to know what each abbreviation stands for. Like here, we have AUD, which is Australian dollar, and CAD, which is Canadian dollar. You should know that. You should know that. Okay. Like I said earlier, these currencies are traded in pairs. They are traded in pairs because you are selling one currency and buying another, or buying one currency and selling another. That is why we say they are traded in pairs. Now, these currency pairs are grouped into three. The first currency pairs we have are called major currency pairs. The second is called minor currency pairs, and the third is called exotic currency pairs. What are major currency pairs? Major currency pairs are pairs of currencies that has USD with other major currencies. Remember, the major currencies I listed earlier. These currencies, when all these currencies are paired with USD, when these currencies are paired with United States dollars, they form what we call major currency pairs. When you pair each of these with United States dollars, you form what we call major currency pair. These are the examples I gave here. These are the examples. It's very simple to understand. The minor currency pairs. These are major currency. These are major currency pairs without USD. We go back again to the major currencies. These are major currencies as we see. So when you pair these currencies, without USD, when you pay Euro and JPY, or GBP and CHF, or Australian dollar and Canadian dollar, or Australian dollar and New Zealand dollar, when you pair these currencies excluding USD, you form what we call minor currency pairs. Minor currency pairs, and the examples are listed here. Then the last set of currency pairs are the exotic currency pairs. These exotic currency pairs are currency pairs that has USD and currency of other developing countries. For example, when you pair United States dollars with currency of Philippines, which is Philippine peso, you have what we call exotic currency pairs. When you pair United States dollars with Nigerian naira, you have what we call exotic currency pairs. Those countries that are not listed on these major currencies. When you pair currency of any other country that are not listed here with the United States dollar, you form an exotic currency pairs. I hope it's well understood. It's very simple. I gave an example here: USD Philippine peso, USD Singaporean dollar, USD Nigerian naira, and so on and so forth. You can have USD Mexican peso. These are exotic currency pairs. Okay, another thing we're going to discuss now are the common trading terms we use in Forex. There are terms we use in Forex, and the first of it all is long and short. This is the trade direction. Long and short. It simply represents trade direction. I will explain that. Two things happen in Forex markets. Two things. It's either the market is moving upwards or that the market is moving downwards. So if the market is moving upwards, we say that the market is long. The market is long. If the market is moving downwards, we say that the market is short. Another meaning of long is bullish or buying. Another meaning of short is bearish or selling. So if the market is moving downwards, you will hear Forex traders say the market is short, or the market is bearish, or the market is selling. So when you hear those terms, you should know what it means, what is happening in the market. When the market is moving upwards, you will hear some Forex traders saying that the market is going long, or the market is bullish or buying. So when you hear these terms, these words in Forex trading or Forex market, you should know what the market is doing at that particular time. I will explain this further so that you understand when do we say that market is moving upwards and when do we say that market is moving downwards. Let's explain further. Let's use Euro USD, for example, Euro USD. If the current price of Euro USD is 1.1600, And after some time, that's the current price now. Then in the next 15 minutes or 30 minutes or 1 hour, the price moved to 1.1800. You can see that the price increased to 1.1800. So when there is an increase in price, we say that the market is going upwards. That's when we use the word long, that the market is long or bullish or buying. Do you understand now? Do you understand that now? So the price of the market at any given time, the change in price determines whether the market is upwards or downwards. In other words, whether the market is bullish or bearish. So if this market goes downwards, maybe the current price is 1.1600, and after 1 hour, the price becomes 1.1100. You can see that the price went down. That is downward direction. So in this market situation, you hear traders saying that the market, this Euro USD, is short. Some will use bearish, some will use selling, because the price is moving downwards. It's very simple to understand. So the price tells us whether the market is going upwards or downwards, whether the market is long or short, whether the market is bullish or bearish, whether the market is buying or selling. That's for long and short. The next term we are going to look at is a Peeps. Peeps. Peep is the smallest price movement in the market. Smallest price movement in the market. For example, if the price of Euro USD is currently, let me write it down. If the price of Euro USD is currently Euro USD, if the current price is 1.06976, then after some time, maybe 1 hour, 30 minutes, or 2 hours, or 4 hours, the price moves to 1.06996. You will see that this price moved 20 units upwards. 96 minus 76, that's 20 units. This 20 is what we call pips. So you hear traders say that this price moved 20 pips. 20 pips. Another example again is if the current price is this 1.06976 and the price moved downwards to 1.06946. The unit price from this we can see that this price moved 30 units downwards. So this 30 is 30 pips. I don't think you get this. It's very simple. Just find the difference and the current price and the previous price when you enter the trade. That gives you the pip, the number of pips the market has moved. It's very simple. But then all these mathematics we are discussing here is really not too necessary, because the platform you are using to trade calculates all these automatically. These pips gives you the profit you make per every trade. So if this like here, you place the trade at this price and the trade moves to this price, you have made a profit of 20 pips. We are going to see how this 20 pips, how many profits we make with these 20 pips in USD, and how many profits we make with these 30 pips in USD. We discussed that under leverage. But then all this calculation is done automatic. You don't need to worry yourself about calculating all this. You will see on your screen, either on your phone or your laptop. All you see there is your profit. So how the machine calculates that profit is what I'm saying here. But you might not bother much how the machine does the calculation. It doesn't mean much. The most important thing in this forex trading is to know when you need to buy and when you need to sell. That's the most important. The calculation behind it shouldn't worry you much, because the system automatically does that. So you shouldn't worry much about that. But if you care to know, then that is what I'm explaining now. So let's continue. The next term we are going to look at is bid and ask. Bid and ask. It's very simple. Bid is the price you can sell, while ask is the price you can buy at. If we go to open that MetaTrader you downloaded on your phone or on your PC, you will see that. Let's go back to the MetaTrader we downloaded. Okay. In this MetaTrader we downloaded, you can see that for every currency pair, for example, AUD/CHF, there are two prices there. There are always two prices beside every currency pair. The first price is the selling price, the price you can sell. The second price is the price you can buy this currency pair. This first price you see, all this first price you see here, are what we call bid price. And these second prices you see here are what we call asking price. Also in the computer, if you have downloaded the MetaTrader from your computer, it's still there. The first price here, this is for Euro USD. You can see Euro USD there. The first price here is the bid price, the price you can sell, while the second price here is the asking price, the price you can buy. Every currency pair has the two prices. You can see here, there are two prices, buy and sell. So why I need to explain that is, for this MetaTrader on the phone, you can see that there is no buy, there is no sell. But on the computer, it's very clear. You see the sell there and you see the buy there. But on your phone, you should know that the first prices is always selling price, and the second prices is always buying price. That's what you need to register on your head. Okay, let's proceed. Okay, I give an example here using GBP USD. So there are two prices. So the first price is the bid, while the second price is the asking price. It's very simple. Okay. The next term we use is base and quote. These are the next terms we use. Base is the first listed currency in the pair, while quote is the second listed currency in the pair. For example, if we look at GBP USD, this pair is made up of two different currencies, Great Britain pounds and the United States dollars. The first currency in this pair is GBP, that is the base currency. And the second currency in this pair is USD, that is the quote currency. So in every currency, if you have something like Euro JPY, that is Euro paired with Japanese yen. This first currency, Euro, is the base currency. The second currency, JPY, is the quote currency. I hope it's very clear. That's simple. That's well understood. Then spread. Spread is the difference between the ask, the bid, and the ask. The difference in this, remember what we said about the bid. The bid is the first price, while the ask is the second price. So the difference between this bid and ask is what we call spread. If you use your calculator to subtract, just subtract this from this. Whatever thing you get is what we have as we call a spread. So if we have 1.16081 minus 1.16033, we arrive at 0.00048. This 0.0048 is the spread. This is the commission your broker earns whenever you place this trade. Assuming you want to place this trade, GBP USD, at this bid price and ask price, your broker, the broker you will use to trade this Forex, earns 0.00048 USD on this trade. So that's their commission. But then all these calculations are done automatically by the system. You don't need to worry about that. Even most in your platform, you can see the spread automatically written there. So this thing I'm explaining now is just for you to know how the brokers arrive at their commission. But you shouldn't worry about that. You shouldn't worry about the mathematical aspect of it. Just don't worry, but understand what spread means. Base, quote, bid, ask, pips, and long and short. Just understand what I mean, because as time goes on, you will hear most traders use all these terms so that you understand what they mean. in Forex market. Okay. Hope you have understood what I explained so far. Please, if you have any question at any point in time, put your question down in the comment section below. I will answer you as soon as possible. For now, let's end our lesson here. In our next lesson, we start from where we start. Okay, please, if you have any question from what I have explained so far, write down your question in the comment section below. With that being said, this is the end of our first class. In our next lesson, we'll start from where we start. That's it for now. I believe you have learned something from this class. Please try to write something down and study this introductory part of the Forex. It will help as we go deeper into Forex trading. Don't forget to subscribe to this YouTube channel, Trade with Chika, and anytime I release new video, you will receive a notification. If you have any question, comment below. Thank you for now and have a great day.